Good morning friends. So the most awaited video is here for you. 1st February 2022 was a very important day since the budget 2022 was announced by our Honorable Finance Minister. A lot of impactful amendments were proposed which will have far-reaching impact on the social sector. So you must be awaiting the key highlights of the budget which are relevant for NGOs, but as always, Team NGOenabler did not jump in providing you with the updates without doing a complete and deep analysis of the relevant amendments and its impact on the organization. So want to know what was there in store for the NGOs in this budget? Let's discuss some of the relevant amendments. First and very important amendment that has been made is giving the powers to the Principal Commissioner or Commissioner of Income Tax for cancellation of income tax exemption in case of specified violations. You heard it right. It's giving the powers to the Principal Commissioner or Commissioner of Income Tax for cancellation of income tax exemption in case of specified violations. So a very crucial amendment has been brought in by amending section 12AB subsection 4, which needs your serious attention. Earlier too, there were certain grounds on which tax exemption could have been cancelled, and this time such violations has been brought out more clearly and covers a wider scope. The term specified violation has been specifically defined via insertion of an explanation to the said section in the Act itself. Let's discuss each of them one by one. Where any income of the trust or institution has been applied other than for the objects for which it is established. So the first point under specified violation is where any income of the trust or institution has been applied other than for the objects for which it is established. This implies the organizations might now need to strictly restrict to the objects mentioned in the object clause of their deeds or memorandum, and any deviation might lead to severe consequences. Even we have noticed in past that although a particular activity or project being carried out falls under one of the limbs of the charitable activities as defined in section 2 subsection 15 of the Act, the same might not fall in line with the objects as stated in the organization's registered instrument. But with this amendment, if at all the organization wants to carry out the activities to cover the larger intent of the definition, it might have to amend its object clause first by adding such objects and then reapply for seeking exemption under section 12AB to the Commissioner or Principal Commissioner of Income Tax. I would also like to draw the attention to the FCRA registered organizations that such objects should also fall in line with that mentioned in your FCRA certificate as well, else form FC6B 2 needs to be filed. So the second point under specified violation is the trust or institution has income from profits and gains of business which is not incidental to the attainment of its objectives, or separate books of accounts are not maintained by it in respect of the business which is incidental to the attainment of its objectives. As you all are aware that the provision to section 2 subsection 15 specifically mentions that activities related to advancement of any other objects of general public utility shall actually be undertaken and the receipts should be less than 20% of the total receipts for that year. This amendment has further strengthened the intent of the legislation. If the activities being carried out in the nature of trade, commerce or business is not incidental in nature to the main objects of the organization, I repeat, if the activities being carried out in the nature of trade, commerce or business is not incidental in nature to the main objects of the organizations, or the books of accounts are not kept separately for each such activities, the exemption might now be revoked. The third point under specified violation says the trust or the institution has applied any part of its income from the property held under a trust for private religious purposes which does not inure for the benefit of the public. This provision was there earlier too, but has now also been included in the list of specified violations, and no charitable organization should incur any expenditure towards private religious purposes. The fourth point is the trust or institution established for charitable purposes created or established after the commencement of this act has applied any part of its income for the benefit of any particular religious community or caste. This implies the organization should not spend any amount towards any particular religious community, and the overall expenditure should be towards the public at large without any discrimination. However, in our opinion, since only charitable purpose has been mentioned, it seems that religious organizations have not been restricted from such kind of expenditures. More clarification from the ministry might throw some light on this matter. The fifth point and the sixth point under specified violations says that any activity being carried out by the trust or the institution is not genuine or is not being carried out in accordance with all or any of the conditions subject to which it was registered, or the trust or the institution has not complied with the requirements of any other law. I repeat, this is very important. The trust or the institution has not complied with the requirement of any other law and the order, direction or decree by whatever name called, holding that such non-compliance has occurred has either not been disputed or has attained finality. So again, both these points were already covered in the Act as one of the grounds for revoking the exemption and has now been added in the list of specified violations. Here, we would also like to caution the organizations, especially regarding non-compliance of any other law. Any other law has not been specifically defined but might cover FCRA, PF, ESI, Society Registration Act or Indian Trust Act and any other acts that might be applicable based on the nature of the organization. So the management might end up losing their tax exemption for even a small violation under any other law if the commissioner or principal commissioner consider such violation of serious nature and deem fit to cancel the registration. Let me know your opinion on this amendment in the comments and how it might impact your organization. Coming to the second amendment which has been made in the budget 2022. Another major amendment which has been brought in has reduced a year for spending the amount accumulated under section 11 subsection 2 of the Act for a period of 5 years. Earlier, as per section 11 subsection 3, if any amount is not utilized for the purposes it has been set aside within the designated time period of 5 years or in the year immediately following the expiry thereof, the unspent amount was considered as income in the 6th year, that is, the year immediately following the expiry thereof. However, with the amendment, now the same needs to be applied within the 5th year itself, else the amount shall be added to the total income in the same year itself. So, or in the year immediately following the expiry thereof has been replaced with being the last previous year of the period. I repeat, in the section 11 subsection 3 or in the year immediately following the expiry thereof has been replaced with being the last previous year of the period. In a way, you can say A loophole in the section has been plugged with this amendment, and henceforth the benefit of an extra year shall not be available because the accumulated amount cannot go unspent for another year beyond 5 years. The third amendment was to bring parity between the two major sections of Income Tax Act, section 1023C and sections 11 and 12, which provides exemptions to charitable organizations such as educational institutions, universities and hospitals. Now, even under section 1023C, something similar to the provisions of section 11 subsection 2 has been inserted, wide explanation 3. If the organization could not apply 85% of the total income, an amount needs to be accumulated or set apart, it shall not be included in the total income of that year if such organization furnishes a statement in the prescribed form stating the purpose of accumulation, which shall not exceed 5 years. The money so accumulated has to be kept invested in the modes specified under section 11 subsection 5, and the statement mentioned earlier along with the return of income has to be furnished before the due date as specified under section 139 subsection 1 of the Act. Similarly, in case of valuation, provisions similar to section 11 subsection 3 has been introduced, wide explanation 4 to section 1023C. Such provisions were already existing under the sections 11 and 12, and now for all such similar nature of organizations, the provisions have been aligned. So it is clear that the government wants the similar nature of organizations in the same sector to enjoy similar benefits to continue their tax exemption status. Now, the next amendment which I am going to discuss is in a way a relaxation being provided, but if you see, a huge penalty too has been imposed instead. Earlier, providing unreasonable benefits to the trustee or the specified persons as defined under section 13 subsection 3 led to the revoking of tax exemption completely for the relevant year, but with the amendment proposed in the budget 2022, a penalty mechanism shall be introduced instead, wide section 271 AAE. The penalty amount proposed is equal to the amount of income applied for the benefit of the trustee or any specified person covered by section 13 subsection 3 in the first year when the violation is noticed, and 200% of the amount when noticed in any subsequent year. Here, one might miss the hidden implication which is actually leading to double penalty. Not only 100% penalty has been imposed on the amount so paid towards the undue benefit of the trustees or any specified person, but also such amount shall be disallowed while calculating the total application of income for the relevant year. However, one relief provided here is that at least the organization shall escape the scare of losing the exemption by paying the penalty amount, unlike the earlier provisions, isn't it? The fifth amendment which I am going to discuss today might prove to be an additional burden upcoming in the way of charitable organizations. In the budget, section 12A subsection 1 clause B, I repeat, in the budget, section 12A subsection 1 clause B has been proposed to be amended, with which now the organizations registered under section 1023C and 12AB shall also need to keep and maintain such books of accounts and other documents in the form and manner and at such place as may be prescribed. I repeat, the organizations registered under section 1023C and 12AB shall also need to keep and maintain such books of accounts and other documents in the form and manner and at such place as may be prescribed. This implies a particular set of records shall be specified by the relevant authorities, which has to be maintained by the NGOs in order to continue enjoying the tax exemption status. Such accounts and records shall also need to be audited by a chartered accountant if the total income exceeds the maximum amount chargeable to tax, and also file the relevant forms specified. Though Audit was already an existing mandate for registered organizations. Now it shall also cover those books of accounts and records which shall be prescribed. Let's wait and watch what new records shall be mandated by the Act. We are enclosing a small checklist in the description box to be filled and submitted by you of the documents that ideally an organization should maintain. The next amendment in section 13 subsection 1 clause C and section 13 subsection 1 clause D is to bring more clarity and logic to the existing disallowances being made under these sections. It has been proposed that now only that part of the income which has been applied in violation or not kept invested in accordance with the said sections respectively shall be added to the total income and not the entire amount. Moreover, while insertion of new section 115 BBI, such specified amount shall also be taxable at the rate of 30%. The seventh amendment which we are going to discuss is, in our opinion, only clarificatory in nature. Let me tell you why. Earlier also, with the plain reading of sections 11 and 12, it was understood that for being considered as the application of income, the amount needs to be actually spent. I repeat, earlier also with the plain reading of sections 11 and 12, it was understood that for being considered as the application of income, the amount needs to be actually spent. Else, the options of accumulation provided by clause 2 of explanation to section 11 subsection 1 and section 11 subsection 2 would have become redundant, because only under these two sections there exists the deeming provisions of being considered as application for any amount up to 85% of the total income which remained unspent. In the proposed amendment, it has been clarified that irrespective of the method of accounting, only the amount actually spent shall be considered as application of income, which means the organizations following accrual or mercantile system of accounting cannot consider those expenses as part of the application which they have only made a provision and not actually spent. So, the intent of the legislation, which was actually the same even earlier, has been brought out with more clarity now. Let me know your views on this amendment in the comments section. In yet another amendment, explanation 3A has been proposed to be inserted under section 11 subsection 1, according to which the religious organizations, I repeat, only religious organizations shall have an option of considering even those voluntary contributions as corpus contribution which is received for the purpose of renovation or repair of religious places of worships, but subject to certain conditions. I am repeating the entire amendment again. Explanation 3A has been proposed to be inserted under section 11 subsection 1, according to which only religious organizations shall have an option of considering even those voluntary contributions as corpus donations which is received for the purpose of renovation or repair of religious places of worships, but subject to certain conditions, that such amount needs to be applied only for the specified purpose. Such amount is not donated to any other person. The organization needs to maintain such corpus as separately identifiable, which ideally means it can be reflected separately as a restricted fund in the books of accounts, and the organization needs to keep that fund invested in the modes specified under section 11 subsection 5 until utilized. The violation of any conditions discussed shall lead to such sum being added to the total income, wide explanation 3B to the said section. The ninth amendment to be discussed, which also is useful for NGOs, is the amendment brought in section 194 IA, that is TDS on purchase of immovable property. Unlike earlier, where TDS was to be deducted on the total consideration amount, post the amendment, TDS shall now have to be deducted on the amount of sale consideration or stamp duty value, whichever is higher. However, the rate remains unchanged. The last but another amendment that is very much relevant also for NGOs is the extension of timeline for furnishing the updated return, which includes both belated return and revised return. So the time limit for filing the belated or revised income tax return, which earlier used to end within the same financial year, now can be filed within 2 years from the end of the relevant assessment year. However, if the return is of a loss or results in refund or increase in refund or reduction in total tax liability, such updated return cannot be filed. So a lot of diverse and challenging amendments for NGOs have been brought in by the budget 2022. Every year, some or the other overhauling of tax provisions take place to bring in more transparency and accountability among the social sector organizations for the overall larger interest of the society. For more such updates and videos, keep tuned to our channel and don't forget to subscribe it. For any clarification, you can contact us through mail or comment below. Thank you.